Hello and welcome to this week's crypto update. So what's been happening this week? Well, once again, it's back to the macro. And of course, the big news this week is there's not a lot of news from the Fed. What have they done? Well, on Wednesday, the Fed Reserve kept interest rates unchanged for the third consecutive meeting as expected. So they didn't increase rates, decrease rates, and there is much questions about when this might happen or what it might mean to the overall market. Jerome Powell sees economic risks rising, but not enough that he thinks it's time to change course. So economic risks, there are two things that they must look after. Is number one, interest rates. They are looking to bring interest rates down to around that 2% mark. We're well off that at the minute, and at the same time, they're there to try and protect the overall economy. At the moment, the overall economy is showing signs of weakness, but as he has said here, not enough to warrant reducing interest rates. But at the same time, there is much fear that inflation and those interest rates will continue to tick up, particularly off the back of the uncertainty with tariffs. There's a growing list of pressures that sit behind the decision: stalling growth, pessimism about consumers and businesses, uncertainty on tariffs, and a president with a different take on rates. He is very much, President Trump is very much calling for lower interest rates, trying to put a lot of pressure on Powell to do that. But Powell is coming out and saying, if the large increases in tariffs that have been announced are sustained, they're likely to generate a rise in inflation, a slowdown in economic growth, and an increase in employment, he says. So what he's saying there is what stagflation is, the worst of both worlds, where interest rates go up and the economy slows down. Because what that means is people have less money to spend and everything's getting more expensive. The ideal scenario is that economy is really strong and interest rates are low. At present, because there is so much uncertainty out there, and a lot of that is built around the tariffs, if the tariffs are to stay as high as they have been put forward from President Trump, then many expect that to have a upward pressure on the price of inflation, but also equally having a negative effect on the overall jobs market and the economy. Of course, if the tariffs were to get solved and agreements were to be made sometime soon, this, of course, could very much help out both. But what will happen first? Will the economy maintain its strength during this time, or do we move towards a recession, which the Fed would, of course, love to avoid? But to avoid doing that, their move would be to reduce interest rates. That's likely to increase inflation. That's not something they could be seen to do, certainly not for the moment. But at some stage, they may have to choose between the two. So a summary of the Fed decision is the Fed leaves rates unchanged for the third straight meeting. The Fed says inflation remains somewhat elevated, and of course the risk of it going higher due to the uncertainty, much of that around the tariffs. A risk of higher unemployment and inflation have risen. Fed is attentive to risks to both sides of their mandate, both sides being look after the economy, try and get inflation down. But at the moment, they are going against each other. The Fed appear to see higher risks of stagflation ahead. The Fed pause continues despite Trump's calls for cuts. So what does all this mean for Bitcoin and the rest? So Bitcoin, this year's Bitcoin dominance on the weekly, it's over 65%, which is a 4-year high. Basically, Bitcoin is kicking the crap out of the rest of the crypto market. In other words, the overall percentage of the value of Bitcoin's market cap is now at 65% of the entirety of the crypto market, leaving only 35% for the rest of the altcoins. That number is growing. Bitcoin's getting stronger at the same time as we see the altcoins starting to suffer as a general rule of thumb. Here is the chart of that Bitcoin dominance growing really strongly over the last number of years and now getting to a high of a 4-year high. What does that mean for Bitcoin? And the big question many are asking is Bitcoin a hedge, and what about altcoins? What do we mean by is it a hedge? Well, Bitcoin is seen as a risk-on asset, or has been for many years, where if the stock market goes up, Bitcoin goes up. When the stock market comes down, Bitcoin comes down, because they're all risk-on assets. Many people within the crypto space and otherwise have been suggesting that Bitcoin would become a hedge to the stock markets. In other words, when the stock market suffers, Bitcoin would do well. A bit like what gold would tend to do. Many people put Bitcoin forward as digital gold. And so when the markets suffer, often gold will do well. Many expect the same to happen to Bitcoin. Is that starting to happen? Well, some of the numbers would suggest that's quite possible. If you look at Bitcoin's value since the start of January, the 1st of January to now, it's actually up about 7%. At the same time, the S&P, the Nasdaq and so on are down somewhere between 3.5% and 4.5%. So while they've been suffering in price, Bitcoin has been climbing. The next question to add to all of that is, number one, why is that happening and what does it mean for altcoins? Well, first of all, why might it be happening? Well, there's a number of reasons. Bitcoin held by corporations since mid-2020. Back then, corporations held 4.2 thousand Bitcoin. Today, that number is 765,000. And that's, a lot of that, of course, is strategy, but it equates for about 72% of the total, which of course is huge, but it also means that there's nearly 30% out there with other companies. There are more and more companies out there starting to bring Bitcoin in as a reserve for their company, and the evidence would suggest that each of them that are doing that, not only are there more companies doing it, but each company that is doing it is continuing to buy and buy and buy. And of course, these are long-term holders in the main. So what this means is a huge amount of the Bitcoin that's coming, that's being mined through the year is being bought up by corporations. In fact, of the 165,000 Bitcoin that's expected to be mined this year, already in just this quarter, just corporations have already bought up 90,000 of those. So in just one quarter of the year, we have seen that over half the supply has been bought up just by corporations. That doesn't even bring into the equation about what governments and indeed states are doing. And of course, we saw, a historic announcement happening in the last couple of days. New Hampshire signed strategic Bitcoin reserve into law. They are the first state to do it. Will others follow? Arizona looked like we're going to be the first, but that actually got shot down at the last minute. New Hampshire are the first. Many will follow. Not to mention the governments around the world doing the same. So, is Bitcoin becoming an asset that people buy into when there's uncertainty? Well, one thing's for sure, uncertainty is absolutely massive out there at the moment, both around the overall economy, inflation, and of course many people believe that in some point in the not too distant future, the US will start printing once again. This undermines the value of the dollar, and many people believe that Bitcoin is a hedge to that. That might go some way in part to explaining how Bitcoin now is starting to go up in value while the stock markets and other risk on assets are starting to reduce in value. So interesting times there. Now, what about Ethereum? So Ethereum activates the Petra upgrade. So this is a huge update that Ethereum have just brought forward in the last couple of days. In general terms, it's a long document. There's a huge amount of detail in all of this. But in summary, what it comes down to is it's an increasing staking capacity. It's upgrade wallet functionality. So there's a much easier to use, much more you can do on the wallet. But it also improves network efficiency. So it's faster and cheaper. And who doesn't like that? On the staking point alone, staked Ethereum now, so prior to this upgrade, represents over 50% of total supply. So of all the supply that's out there, there's 50% of it staked, which is, a long-term holder view. That number continues to increase. Now, with the new upgrade, what they've also brought is that Ethereum can be staked from it's been risen from just 32 Ethereum, which is a rough value of $60,000, all the way up to now you can stake 2,048 Ethereum, which is roughly $4 million worth. That's a huge number upwards. Who do you think this most favors? Has the retail market been crying out for this, or do you think it's the institutional out there that's going to have that $4 million worth of Ethereum that they would like to be able to stake? On top of that, we've seen that the big institutions and the ETFs that are out there are talking about wanting to be able to stake Ethereum. This could be a huge move for what comes next. At the same time, we see that we've reached an all-time high with stablecoins in existence. So there's 221 billion. That's how much money was denominated in stablecoins as of Monday, which represents a new market cap all-time high for that asset. And what are stablecoins? They're dry powder to buy into crypto for the main. There is a huge amount of money prepared to inflow into crypto. When will that happen? More than likely when we see a reduction in that overall volatility and uncertainty that's in the market. What will this mean for Bitcoin? And more importantly, what will it mean for the altcoin space? If you'd like to know more on how we believe this is going to affect both Bitcoin and the altcoins, make sure that you are part of our private group. To do so, you can go on to wealthofwisdom.io, register there, and you can get access to our private group where we go into detail as to what we believe will happen next. See you there.